Hello to everyone. Today I am here with time value of money lecture number 5. If you are interested to have update videos on banking and finance related topics, please do subscribe my channel. In the previous lecture, we have calculated the installments both for annuity due and ordinary annuity. Today we are going to calculate the future value by applying the compounding method and formula for the ordinary and ordinary annuity and annuity due. What is the future value of annual annuities for 50,000 for a period of 5 years? Consider the interest rate equal to 12%. In a similar way, we have first 50,000 after first payment is made, 50,000 at the end of first year, second at the end of second year, third at the end of third year, and fourth at the end of fourth year, and fifth at the end of fifth year. Here we have simply applied the future value compounding formula. Here we have FV4 and calculate its value that comes equal to this much. In the second case, it's FV3. We have applied the formula and calculation comes equal to this one. In the second case, the value is the value is 50,000 power 1 plus 0.012 power 2, it comes this much. Here it comes this much. Here the value is 0, 0. If any variable having value equal to 0, it comes equal to 1. So the total value comes to 50,000. We sum all the above value and our answer comes to 317,742.37. It's simply applying the compounding method. If you have higher numbers of the value, it comes very difficult to calculate. So we are going to calculate the same question by applying the future value annuity formula for the ordinary annuity. That comes equal to PVAN equal to PMT 1 plus K power n minus 1 divided by K. So the what's given in the question, annual annuity, that is PMT equal to 50,000, N is equal to 5 and K is equal to 12. Here we are going to calculate the future value annuity in case of ordinary annuity. The answer comes, you can simply see, you can have a formula here. After putting the value here, we have calculated the answer comes 317,642.37. Now you can calculate, you can compare the answer with this answer. You will find this similar answer in both cases. Okay. Now it's the case of future value annuity, future value for annuity due. What's the difference? First value comes FV5. Second value comes FV4. Third value comes FV3. Fourth value comes FV2. And last value comes FV1. Because it starts from the in advance from the time of investment. First investment start in the beginning of the first year. In the previous case, the first installment was started at the end of first year. So here you have make the calculations. Now you have already done these practices in the previous lectures. You can easily do it. After summing all these values, the answer comes equal to 355,759.45. Now we are going to solve the same question by applying the formula. Here we have annual annuity is equal to 50,000, term is equal to 5, K is equal to 12, and FV earn for the annuity due is to calculate. You have put all the values in this formula. The answer comes to 3555 759.45. Here you can compare the answer. You will find the same answers in both cases. In the similar way, you can calculate the values for semi-annual, quarterly, and monthly. That you can do as your practice. Thank you very much. See you again with the upcoming videos on the topics related to banking and finance.